friends, I'm back with another video, and in this one, we will help you understand chart of accounts. Chart of accounts. Every time you record a business transaction, you have to record it in the right account. Each transaction represents some sort of change to either of assets, liabilities, equity, income, or expenses. Business transactions are recorded in accounting through ledger accounts. One ledger account is always debited and the others credited. It is very important to know which account to select for debit and which to be credit. Companies often use the chart of accounts to organize their records by providing a complete list of all the accounts in the general ledger of the business. The chart makes it easy to prepare information for evaluating the financial performance of the company at any given time. What is the chart of accounts? A chart of account is a list of all your company's accounts together in one place. It provides you with a view and knowledge of every area of your business that spends or makes money. Or in other words, a chart of accounts is a listing of the names of the accounts that a company has identified and made available for recording transactions in its general ledger. A company has the flexibility to tailor its chart of accounts to best suit its needs, including adding accounts as needed. A chart of accounts is a financial organizational tool that provides a complete listing of every account in the general ledger of a company, broken down into subcategories. It is used to organize finances and give interested parties, such as investors and shareholders, a clearer insight into a company's financial health. To make it easier for readers to locate specific accounts, each chart of accounts typically contains a name, brief description, and an identification code. Balance sheet accounts consist of assets, liabilities, owners or shareholders' equities. Income statement accounts are operating revenues, operating expenses, non-operating revenues and gains, non-operating expenses and losses. Statement of changes in equity accounts. Common stock, preferred stock, treasury stock, additional paid up capital, retained earnings, unrealized gains and losses. Statement of cash flow accounts. Cash flow from operating activities, cash flow from investing activities, cash flow from financing activities. That's all for this video. Your feedback will be highly appreciated and will help us to improve the content. Join us in the next video to know about components of statement of financial position. Thanks for watching. Do not forget to click the subscribe button and hit the bell icon for latest updates.